Hey, everybody. Thanks to the previous speaker also from my side. Yeah, should I just share my screen right away?
You can, Rob, just one thing. Let me just introduce you.
Oh, yes, sorry, I'm getting ahead of myself, yeah.
So we have Rob from Staking Facilities here. He's also building the Solana Beach, which is very popular, actually probably the most popular explorer on the Solana ecosystem. And the Beach Explorer, or the Explorer in itself, is similar to what you can do with Google. In the internet, you can search for things. And I hope, Rob, you're going to show us how to use that, and also what was the idea behind creating it, like the bigger vision that you and your team have regarding the Web3, and then, you know, just your perspectives on Solana in general. That would be super helpful.
All right, yeah, sure thing. Let me just set this up real quick. Can you guys see my screen?
We can see your entire screen, yeah.
Okay. Just click present to make it bigger. There we are. Can you see the slides?
No, not yet. They're loading.
Oh, okay.
Yes.
Oh, wow.
Now here you go.
There they are. Sweet. Okay, then hello from my side again, and thanks for having me. Yeah, in the next 20 minutes or so, I will share my 2 cents, our 2 cents on Solana and the overall ecosystem. And then, yeah, I'll stick around for some questions and conversations. And yeah, looking forward to it. So, you know, blockchains are often taken as an information and communications technology innovation, which does make sense given the fact that they are some sort of decentralized network of nodes that talk to one another and share information between them. But another viewpoint that is maybe not as popular, but also getting more traction, especially in literature, is that you can consider blockchains as governance technology innovations, you know, kind of mechanisms to foster and facilitate consensus finding between them and different parties that collaborate in them and make up the network. And so this already goes to show that you can have different angles to look at a blockchain. But today I would like to put on my beach goggles, also like the title, and take a closer look at the Solana blockchain. That's what we're all here for, right? And maybe just why beach goggles, you might wonder, like Yip already said it. I work on the Solana Beach block explorer, which we launched last year. And fair disclaimer, Yip also mentioned it, I also work for a validator. So I will throw in this viewpoint here and there as well. And we are a validator on several proof-of-stake blockchain, one of which you probably guessed it is Solana. And yeah, taking a look at Solana from the point of view of a block explorer enables us to combine these two different viewpoints that I just mentioned. I don't think that I have to make the case for why blockchain today, since I think that we're all very much aware that this is the evolution of the internet towards Web3, in which blockchains play a fundamental role. What I would like to make a case for today is, though, why Solana maybe. By all means, I don't want to shill Solana or bash any other network that is out there. I just want you to know that I work for a validator, and one of our strongest convictions is that we are heading for a multi-chain future, and that is also what I believe, but just today we just like to focus on Solana. And specifically, I would like to address these 3 questions. So how does it solve the blockchain trilemma? What differentiates it from other layer ones? And how does the ecosystem look today, just 1.5 years after it went live? And then I would also, yeah, show you Solana Beach if you want, and yeah, maybe the bigger vision behind it also. I can also go over that. But before we dive in, maybe just to briefly start out, what is Solana for everyone here that's maybe not so familiar with the Solana blockchain? So the textbook definition would be that that you often find is that Solana is a layer 1 proof-of-stake smart contract platform. And this puts it right up there next to Ethereum, Polkadot, Avalanche, you know, just to name a few. There's more out there. But, and in general, why do we even have different layer ones is also a pretty good question to ask oneself. And well, obviously all these different layer ones took different design approaches. They have different focus areas. They maybe use different tech stacks, etc. But at the end of the day, what they'll try to do is that they try to overcome the so-called blockchain trilemma. And what the blockchain trilemma basically states is that one has to choose between scalability, decentralization, and security, that you can't really get all three characteristics without compromising on at least one of them. And security and decentralization, they kind of go hand in hand often, vaguely speaking. So because as a network gets more decentralized and the more different parties control a third of the stake, the network gets more secure. That's the case for Byzantine fault-tolerant proof-of-stake networks. This threshold of 33.3% is the threshold one would need to surpass in order to halt the network. Now, obviously, audits, bug reports, the ability of the network to resolve any bugs, or to also play a very crucial role in the security of in the network security. But I think today, at least for the major layer ones such as Solana, it's safe to say that they pretty much have solved the security side of the trilemma. I mean, yes, there have been network outages on Solana, on Avalanche, and Polkadot, but these have been resolved without any major economic damages. So that's why I would just like to focus on scalability and decentralization, because this is also always a topic that is widely discussed, and there's many different viewpoints on these two topics. So maybe starting out with scalability. Like in general, there are two major approaches of how one can scale a blockchain. One is sharding and one is no sharding, for lack of a better word. Let's just go with no sharding. Sharding splits up the blockchain into several pieces, so-called shards, which are oftentimes application-specific blockchain, while the second approach, no sharding, tries to achieve everything on one single chain. Now, today, most layer one blockchains take the sharding approach. Ethereum, Cosmos, Polkadot, they're all sharded systems, for example. And the idea behind that is that every node, nodes make up the network, does not have to process every transaction, which then ultimately increases the throughput that you can get for the network. And now what this enables us to do is that we can run non-dependent transactions in parallel. So not sequentially anymore. There was the case with single EVM-based chains. Let them run them sequentially. And now running them parallel obviously increases the throughput, the speed, and everything. Now, unfortunately, sharding breaks composability and introduces latency, for instance. It also might introduce further costs because these different shards might need to talk to one another. And for obvious reasons, this is not ideal for UX. And it's fair to say that as of today, except for maybe Cosmos, these sharded systems haven't been really stress tested out in the wild. So we'll just have to see how this plays out. Yeah, side note also, when I say Ethereum as a sharded system, I mean Ethereum 2.0, being sloppy here, but anytime I talk about proof of stake Ethereum or sharded Ethereum, I'm talking about Ethereum 2.0. Now, Solana takes a totally different approach. They try to process everything on just one single chain. And what's super cool with Solana is that even though everything runs on one single chain, non-dependent transactions still can run in parallel, and due to several core innovations. First and foremost, proof of history. That's probably something a term that you probably came across already. There's a lot of cool blog posts, videos about proof of history, about the other core innovations of Solana. So I would just briefly touch upon them. Fair warning, it's a rabbit hole, so you can sink quite a bit of time in that. So what happens now in Solana is that validators, like staking facilities, like Chorus One, which you'll hear talk from later, they take turns in writing to the ledger according to a randomly generated ledger schedule. And each validator runs a so-called verifiable delay function. We don't need to go into detail there, but what this actually does is that this verifiable delay function can only be run on a single core. So this always takes a certain amount of time so that the passage of time can be calculated by validators running this function. And what this does is it introduces actually a sort of clock across the network and timestamping of transaction, which enables us a kind of a trustless mechanism for event ordering. And this then in turn enables or takes load from every node so that they don't have to process every transaction themselves, but or every transaction that takes place on a Solana blockchain doesn't have to necessarily be processed by every validator, but just some, because every validator runs this clock. So these transactions can be ordered, even though we're not constantly talking to one another. And this is kind of the biggest secret sauce it's out in the open. It's not a secret sauce really, but this is what Solana helps the network to handle up to 50,000 transactions per second. And it even leaves room for improvement because as hardware gets better, validators or these machines can process things faster. So as we go, or that's probably the reason why, or that is the reason why it's often said that Solana scales with Moore's law. Now, so to sum up, maybe Solana achieves incredible scalability while not sacrificing composability or introducing latency, since everything runs on a single chain. That's pretty cool and pretty impressive. If we move on to decentralization, and this is where it gets interesting, and this I think is also the reason why we're all here for. I mean, I think we all believe that Web3 is built upon decentralized backends, so to speak. So this is a big and important topic. But what you oftentimes hear in a debate about decentralization, there's oftentimes two things that go missing, kind of. That decentralization, it's not binary. It's not that you're either decentralized or you're not decentralized. It's more like a spectrum that you can move across. And B is that the level of a network's decentralization is not necessarily only correlated to the number of validators that are active on it. And that relates to the 33.3% threshold that I mentioned earlier. And this number, the number of independent validators that control a third of stake, is the most important network metric when it comes to decentralization. And in Solana lingo, this number is referred to as super minority. In other networks or across the industry, what you often find people also calling this is the Nakamoto coefficient. So yeah, you can go with either or. I'll just stick with super minority. It's easier to say, and this is just used in the Solana ecosystem. The folks from Chainflow, which is also a great validator from the United States, they post about the Nakamoto coefficient every week, and they compare the Nakamoto coefficient from different blockchains and just list them so that we can compare them. And I posted a tweet in the slide. So what you can see that any of these networks isn't as decentralized as we want them to be. And why is that the case, you might wonder? Well, there's numerous reasons. First of all, these networks are super young. I mean, Cosmos is 2 years old, Solana is 3 years old, Solana 1.5. And second of all, finding good validators to operate on these networks is also tough. But I'm pretty confident that once more economic activity takes place on these networks, that also feeds into what the previous speaker was saying, that once more economic activity happens on these networks, which I'm convinced that this will be the case. I mean, we have CBDCs, we have traditional finance players looking into DeFi, we have gaming, we have creatives coming into the place through NFTs. So I'm pretty confident that more players will into the validation business once these networks proliferate, kind of. Now, a case that is often made for Solana specifically when it comes to decentralization is that it's too expensive to run a validator on, that it's not feasible for hobbyists to run nodes, which then somehow leads to a centralization of stake. And while it's true that running a validator on Solana is costly, good machine to run the Solana software on costs you around 4K, and you need 1 sol per day to vote on the network. The cost of hardware is going down year over year, and its performance is also increasing. Here Moore's law strikes again. And so furthermore, that's a big furthermore, the Solana Foundation, a nonprofit, I think from Switzerland, is very committed to foster decentralization. So they have a delegation program in place to support smaller professional validators, where they contribute a bunch of their treasury to. They open source the stake pool program, which enables anyone to set up and manage a stake pool. So basically a program that collects stake and distributes it to a bunch of different validators. And a minor detail that often gets overlooked is also that the delegation functionality is built into the core protocol of Solana, and this also fosters decentralization. So here's a look at Solana Beach. We can also have a look in a minute where you see the super minority. It's 20 already. As you can see here, most of these entities are known. You can reach out to them, you can talk to them. There's real people behind them. So it's already I would say, okay, Solana isn't maybe as decentralized today as we would like it to be, but that's not a Solana specific problem. That's rather something that is native or applicable to the young proof of stake industry, which will change down the road, like I said. And that being said, I think that Solana is already quite decentralized and credibly neutral, which means that not one single party can actually corrupt the system, censor the system. So even if we would go rogue here at staking facilities, we couldn't really do much damage. We would need to reach out to all these 19 people and corrupt and do some stupid stuff, which is kind of tough. Also, furthermore, like I said, the Solana Foundation ecosystem is well suited and committed to move further towards the decentralized end of the spectrum from the decentralization spectrum. Yeah, and I think this approach, Solana's approach to tackle the blockchain trilemma, is already quite unique and sets it apart from most layer ones. I think that's the biggest difference already. Another differences are that Solana smart contracts are written in Rust and that it was not EVM compatible from the get-go, which initially scared off quite a few people because that meant that you just couldn't port over projects from Ethereum just to work on Solana, like in a copy-paste kind of fashion. But Solana, they did this. I learned this in a recent podcast with Kai Samani, the CEO of Multi-Chain Capital. They lean strongly against the status quo to somehow create a sort of Schelling point, a point at which you either win over people that are really excited in this new thing, or you lose out on people that say, okay, I'd rather stick with the status quo and not build on this new thing. Now, if you couple this Schelling point with the foundation's great work of providing well-structured, well-written docs, hosting one top-notch hackathon after another, and obviously the incredible speed, low transaction fees, you get a very solid, very committed young community that now, 1.5 years later, after the network launched, has, in my opinion at least, has reached escape velocity. I mean, there's so many new projects popping up left and right, it's close to impossible to keep up. Yes, they are not all top-notch projects. Obviously, you have your fair share of shitcoins, but what you also have is a thriving, very committed community and ecosystem that grows organically. Plus, on top of that, we have a bunch of bridges going live that bridge EVM-based chains to non-EVM-based chains. So this also obviously feeds into this multi-chain thesis that we at staking facilities follow. And this already brings me to my last point that I wanted to go over is how does the Solana ecosystem look like 1.5 years after the mainnet went live? I mean, if you look at the network, you have more than 1,000 active validators, you have basic tooling, such as wallets, explorers, you have a thriving DeFi ecosystem, you have gaming, you have NFTs, and I could talk for hours, but I think this graphic by the Solanians team does a pretty good job of compiling and really distilling this down to the basics. This is from the beginning of September, so it's already outdated probably, but it just goes to show that the ecosystem is thriving. Yeah, but let's take a look at a closer look at a few products or projects that are built upon Solana. And first and foremost, which is a very important kind of pillar for every blockchain network, is basic tooling such as wallets. And here we already have very cool wallets that got a lot of traction already. So for instance, Solflare recently had a massive upgrade. They will soon launch on mobile. They were able to, out of all the tokens that are staked on the Solana network, 1/4 of it was staked through Solflare, which is quite impressive. Phantom is another wallet that is, I think it has 400,000 active monthly users, close to 1 million downloads. So this is already quite a significant sign of traction there. Yeah, and this is just cool to see that these two projects gaining so much traction, helping in onboarding many new users to Solana, helping everyone to engage with the Solana blockchain. So this is super cool. Yeah, the story goes that in one of the first pitch decks that ever was circled around for Solana, it branded itself kind of as the NASDAQ of blockchains. And I think today, I took the screenshot today, with close to 10 billion USD locked across major DeFi applications running on Solana, it's not only the third largest chain in terms of total value. Ethereum and Binance Smart Chain, two EVM-based chains, come before it. It's well on its way to become a very fertile ground for any DeFi application. And institutional interest in that is also gaining traction. Now, for gaming, for instance, you have Star Atlas, which is I'd say a AAA title, a AAA gaming title that doesn't really stress only, hey, we're building on blockchain and blockchain this and blockchain that. No, they want to build a super cool game that happens to use blockchain in somewhere. So they created these whole in-game economics where you can sell land, spaceships, and all the good stuff, while still giving you a cool gaming experience that you know from Web 2, really. Another great example, which is super cool, is Audius. It's getting a lot of traction. It has 5 million monthly average users, which is just incredible. It's like a music streaming platform similar to Spotify. It's built on Ethereum and Solana. So this is already a sign of DeFi and all that is nice, but we also have non-financial products coming to life here, really. Yes, you see the ecosystem has come a long way in just 18 months, which is incredible. But maybe to recap quickly and to put on my validator's hat and put on my beach goggles and maybe throw in a bit of an investment perspective too. So just given the different approach to scaling, I think it's a good Solana or Sol is a good asset to balance your portfolio. And given this insane performance that Solana has already today, it's well suited for DeFi, gaming, social. In other words, it's well suited to welcome a lot of economic activity to happen upon it. And if millions of transactions take place on this network, earning a share of the fees that are generated through this activity is a worthwhile and lucrative business opportunity. And the cool thing about blockchain is anyone can participate and grasp this opportunity. So you don't have to run a validator, you can just delegate to us or preferably to someone outside the top 20. So I would really appreciate it, as much as we would love to have you, to delegate to someone outside of the top 20 in order to grow the super minority and foster the decentralization. If I put on the block explorer point of view, it's very challenging to keep up with Solana, very challenging. It produces insane amounts of data each day. And as a block explorer, you want to fetch the data from the blockchain and feed it to the end user in a matter of seconds. And what has to happen in between is you have to make sense of this blockchain data, which is not a trivial task. You need to parse the data and all that. So it's pretty insane. Also, there's a Cambrian explosion going on currently on Solana. Yeah, like I said, and like you saw in the graphic, there's so many new projects coming to life every day. As a block explorer, we want to index them, we want to engage with them, but it's hard to keep track. And in general, making sense of raw blockchain data is super hard. You need to find and train people for that, which, I mean, as a startup, it's difficult, but it's a lot of fun. And we're very bullish on the blockchain sector in general. Solana in particular, we think it will definitely play a role in the future, given its performance and its different approach to scaling. Yeah, the bigger vision for Solana Beach is just to make this data accessible and understandable for everyone. We need to improve on that end. There's a lot we can make better here. But yeah, that's what we're building, so that everyone can make sense of what's going on on the Solana blockchain. And maybe now we can have a look at it too. So solanabeach.io, that's where you need to go if you want to explore the Solana blockchain. Yeah, and
Rob, can you make it bigger, please? We're seeing your
yes.
entire screen right now.
Oh yeah. Okay, let me make it. Yeah, I have this. We have this humongous screen in the office.
I know where you are.
Yeah. Yeah, you know where we are. Yeah. Let me zoom in. So yeah, this is just basic information about the network. You can track which validator is currently writing to the blockchain. You see how many slots we've passed. You see how long an epoch will remain, how long to the next epoch. So epochs are always the time schedules for when the ledger schedule, the time slot for when the ledger schedule is valid. Staking rewards, for example, are paid at the beginning of every epoch or the last epoch. You can see how many transactions are currently being processed, a bunch of metrics. This is a pretty cool site where you can see all the validators that are active on the Solana blockchain. You know, if you want to stake, you can check them out, see what they're doing, where they're based, their fees and everything. And what we try to do here is by hiding or by compromising this space, the top 20, we try to get people or to nudge people to stake to validators outside of the super minority in order to foster decentralization. Yeah, and I mean, could fill another 2 hours just going over this. You can explore transactions, blocks, tokens, everything. Yeah, I think it would go beyond the scope of this presentation. But yeah, if you have any questions, feedback, always feel free to reach out. We love to chat. Yeah.
You're
Thanks
hiring
again for
too,
having
right?
me. Yes, we're hiring too. That's why I have a hard stop in around 10 minutes. We have an interview at 2. So if you're interested in building, if you're interested in processing massive amounts of data, if you're interested in the Solana ecosystem, if you're interested in front-end work, in UX, anything, reach out, let us know, and we're happy to jump on a call, get to know you. But yeah, maybe there are some questions right now that I can address, or feedback, or anything.
Yeah, let's do this, guys. We have 3 minutes for questions. Anybody have any question, please write them in the chat. I'll read them out. I'll give you the microphone. In the meantime, Rob, share your grander vision. Like, where do you see the Web3 space heading? What would you love to see in the space?
That's a very interesting and very good question. I don't think that, I mean, Web3 is also a term that gets defined differently. For some, it's just a blockchain specific term. For others, it also includes, you know, Internet of Things and all that, so AI. I think it's the bigger vision is that all these big technology trends will converge and will be powered by a decentralized backend. But by all means, I don't think that Web3 is the panacea for everything. I think, I mean, even today, if you think of Web2, it still hasn't penetrated to every market sector. There's still things that get digitized today that should have been digitized 10 years ago. So I think it will take time until Web3 penetrates all the areas of the world. But what I think is interesting is this ownership model or this different governance model. You know, now you can try out different you know, ways to organize yourself. If you think of the tragedy of the commons as an economic problem, now we have code-based solutions to that. If you think about public goods, these can be managed with crypto economic incentives. This will be especially interesting for things like climate. These are all public goods. How do we manage them? How do we go about them? Do we really have to force our capitalistic system upon them? Is this really the best way to address this? Maybe not. Now we have a playground, a technology playground where we can try out new things. Some will fail. We already see some things are replicated from the traditional financial world, also in crypto, which is not an ideal development, but you can also see totally different approaches. Like you see founders giving up ownership of their products after a while, like Aave did, which is super cool and super interesting. You see artists engaging with their fans directly. So this is, I think, a social phenomenon. So it's hard to make predictions. Yeah, so I think it's going to be big. I don't know when. I think it will penetrate into pretty much all aspects of our daily life. And the best strategy, in my opinion, is just to take a look at it, try to get engaged. Super easy to participate. Yeah.
Okay. Well, thanks a lot for the inspiration. I do have a final question though, because
Sure.
I assume not everybody in the audience actually knows what is a validator and what do validators do. So you would be most suitable to give, like, you know, a elevator speech about that.
Okay, sure thing. So the quickest way to explain this is if you think, okay, blockchain are decentralized systems. What does that mean? It means that there's not one single party responsible for operating the network, but a bunch of different entities are responsible for providing infrastructure for the network. I mean, the internet just doesn't, or Facebook just doesn't come out of thin air. It runs on servers. And now if you don't have a centralized entity that runs the servers, you need to have different entities that provide this infrastructure for the blockchains to run on, that maintain it, that manage it, that kind of run the blockchain software. And validators, that's what validators do. They are at the very base layer. They operate and run the blockchain so that everyone can use it, can build upon it. They are kind of like miners in proof of work systems like Bitcoin, for instance.
Thank you so much for being with us. Sending you warmest regards to Munich. And
thank you.
Yeah, Rob, you're free to stay with us or leave whatever the space, the room just stays open. So.
Oh, okay, cool, cool.
Yeah.
Thank you.
Cool.
Thank you for having me.
Yeah, thanks very much.